Economic growth around the world is beginning to slow down as the ripple effects of tariffs and trade barriers increasing are starting to be felt. In this environment, when job growth is slowing, people's incomes are slowing, layoffs are increasing, unemployment rates are increasing, investors look to companies that can perform well in that difficult economic scenario. Of course, PepsiCo and Coca-Cola are great examples of businesses that perform relatively well, regardless of the economic scenario. So, in this video, I'm going to compare these two dividend stocks and answer which one I think makes the better investment given the current economic condition. I'll compare these two on revenue growth, profit margins, and returns on invested capital. Then I'll look at valuation and determine which one I would rather own at current market prices. That's a lot to cover in a short video, so let's jump right into it after a short message from my sponsor.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So the first thing I wanted to compare these companies on is revenue and revenue growth. And over the previous decade, they've both increased revenue, but PepsiCo more so than Coca-Cola. And it's a result of several factors, right? These companies often make acquisitions and divestitures, and that has a role to play in their revenues. But also during the pandemic, they experienced varying challenges. For PepsiCo, the pandemic was a positive. People staying at home more often were snacking more often, and that was great news for PepsiCo's snack segment. Meanwhile, Coca-Cola has a larger market share in the away from home channel. When you go out to a movie theater or a restaurant or a theme park, you're more likely to see Coca-Cola's beverages with exclusive relationships compared to Pepsi-Cola's beverages. So Pepsi-Cola does better when people are staying home. Coca-Cola does better when people are going out. And of course, during the pandemic, people were staying home more often. And coming out of the pandemic, people are making up for lost time going out more often. So they kind of had the opposite scenarios play out during and after the economic pandemic. The next thing I wanted to compare these two on is the operating profit margin, and Coca-Cola is noticeably more profitable than Pepsi-Cola. Its operating profit margin at 31.2% is up from 23% in 2015. Meanwhile, Pepsi's operating margin at 15% is about where it was at in 2015. The most notable difference between these two and the profitability is the integration of the bottlers and distribution networks. Pepsi has a more integrated network with manufacturing, bottling, distribution, etc., more of that in-house, while Coca-Cola outsources more of that. And that difference has led to this difference in profitability. And you might say, well, if this is working so well for Coca-Cola, why isn't Pepsi doing the same thing? Well, that's kind of the strategy that a recent activist investor is trying to push Pepsi towards, trying to push Pepsi towards the strategy of Coca-Cola so that Pepsi can generate margins that are closer to Coca-Cola's. It remains to be seen if Pepsi will indeed implement that strategy. It's not a strategy that's always beneficial. So I can't always say that de-integration works better or vertical integration works better. It's not a always type of situation. It's a unique situation that needs to be taken on a case-by-case basis by the management teams of each company. It's not even like this industry, yes, it's always good for vertical integration, or this industry, it's always good to have the asset-light business model. It's not like that. So managers need to evaluate their businesses and their situations on a case-by-case basis and make the decision for their own business. The next thing I wanted to evaluate is the return on invested capital. And in this regard, Coca-Cola is not that much better than Pepsi. At 14.9%, it's been improving from 10.7% in 2016. Pepsi is right behind at 13.2%, down from 13.6%, or relatively flat in the previous decade. So now that we looked at the critically important financial metrics, let's look at valuation. I just updated my discounted cash flow valuation models for Pepsi and Coca-Cola today. The intrinsic value for Pepsi came in at $176 compared to the current market price of $141. Pepsi looks undervalued at its current market price. Similarly, I updated my calculation for Coca-Cola and the intrinsic value per share came to $96 compared to the current market price of $66. Coca-Cola also looks undervalued based on the current market prices. Furthermore, when I look at the forward price to earnings, Coca-Cola is trading at a forward PE of 21. Pepsi is trading at a forward PE of 17. They also look undervalued based on these metrics. By the way, I'm getting these charts from fiscal.ai, which is my preferred data provider. There's a link in the description if you're interested. You'll get a discount if you use my affiliate link. So to my conclusion, which one do I think is the better investment, Coca-Cola or Pepsi? First of all, you don't have to choose between these two. I like both of them. I have them both rated as a buy. I think they're both undervalued. Also, it's a close call. It's not a situation where I can easily say one is better than the other. But if I had to pick one of them, if I had to pick one of them today, I think I would pick Pepsi. I would pick Pepsi, and it would only be a slight advantage over Coca-Cola. If you ask me 3 days from now, it might be different. That's how close it is. So it's not one of those easy situations. This is a really, really close call. These two companies are similarly undervalued. I like them both right now. So it's not an easy decision. But if you forced me, I would take Pepsi. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.